Japanese yen is trading range-bound ahead of key data this week, says Scotiabank in a new report. We all know that there are major events in Japan this week, Bank of Japan meeting on Tuesday and Friday's U.S. employment report. So today, the focus will be on Japanese GDP data, which will likely show a rebound in Q2. However, the bank believes that USD JPY will remain range-bound. Let's take a look at the key events this week and how they may affect the market. On Tuesday, Japan publishes its June nationwide core CPI data. The year-over-year rate is expected to rise to 3.3% from 3.2%. If realized, this would mark the highest inflation rate since late 2013. That's important because it will be the last inflation print before the Bank of Japan's July policy meeting. And if inflation remains sticky at higher levels, it would add more pressure on the central bank to take action to start raising interest rates. So will they? Well, probably not anytime soon. The BOJ will likely maintain its ultra-loose monetary policy stance in order to support the struggling economy. And that's exactly what they say in their latest statement. As long as the BOJ maintains its dovish policy, the JPY will continue to suffer. Then on Friday, the U.S. jobs report will be published. The market expects a further cooling in the labor market, with the non-farm payrolls expected to rise by only 200,000 in June, after a downwardly revised 301,000 gain in May. A soft jobs report would increase the likelihood of the Fed pausing its rate hikes in July and would also reduce the odds of a July rate hike. So the jobs report is very important. If it comes in soft, we could see the market pricing out a July rate hike completely. And if that happens, the USD will likely fall. So overall, Scotiabank believes that USD JPY will remain range-bound this week between 138 and 140.50 levels, with the pair's direction depending on the upcoming macro data releases. In other words, if the data is better than expected, the USD will strengthen. If it's worse than expected, the USD will weaken. Very clear. What's also clear is that the market is underestimating the probability of a July rate hike. According to CME Group's FedWatch tool, the market is pricing in just a 9% chance of a July rate hike. As I said before, if the jobs report comes in soft, this probability will drop even further. But what if it comes in stronger than expected? What if the Fed gets more hawkish? Will the market then start pricing in a July rate hike? Possibly, but I believe that any upside in USD JPY will be limited as the market is still waiting for more clues from the Fed. For now, the general sentiment remains cautious. And if you think about it, it makes sense. Why would anyone want to buy the dollar when the Fed is expected to pause? So the short-term outlook for the JPY remains uncertain. The coming week is full of important macro data releases. If the data is better than expected, the JPY may find some support. But I believe that the long-term downtrend in JPY is intact. That's all for today. As always, if you like this video, please give it a like. Thank you for watching, and I'll see you in the next one.